Good morning, good afternoon, or good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Communications and Content Lead. It's my pleasure to welcome you today to the GBBC Virtual Members Forum. This is a bi-weekly webinar we host showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by Ambre Soubiran, CEO of Kaiko, and Clara Medalie, Strategy Lead at Kaiko, for a presentation and live audience Q&A on how robust market infrastructure will boost the adoption of crypto assets. So just briefly before we begin, I would like to introduce Ambre and Clara. As I mentioned, Ambre is CEO of Kaiko. They are a technology company providing market data to the digital asset space, currently covering all traded pairs across 100 plus crypto exchanges distributed all over the world. And prior to joining Kaiko, Ambre spent 8 years at HSBC in London and Paris, structuring equity derivatives and equity-based financing solutions, first in the global markets and then in equity capital markets division. There, she successfully covered private banks, institutional, and corporate clients. She has been personally interested in cryptocurrencies since 2013 and has invested in a few tech startups in the fields of 3D printing, food tech, blockchain, and crypto. She holds a bachelor's degree in master's and applied mathematics from the Université Paris Dauphine, and she has also studied entrepreneurship and management courses at the Solvay Business School in Brussels. Clara leads research at Kaiko and publishes their weekly market analysis and monthly market reports. As I mentioned, Kaiko is a market data provider in the digital asset space, working with funds, asset managers, researchers, custodians, regulators, and exchanges. We are very pleased to have Kaiko here with us today, and we welcome your questions at any point during today's webinar. You can submit them by clicking the Q&A at the bottom of your screen, and we'll take them after their presentation. Thank you both for being here with us today, and I will hand things over to you to begin.
Thank you, Sophia.
Thanks, Sophia, for the great introduction. So I'm the CEO of Kaiko, and we are the leading provider of enterprise-grade digital assets data. What that means is that we offer a consolidated API data platform that offers access to real-time and historical market data across 100 plus cryptocurrency exchanges. We are connected to both centralized exchanges such as Coinbase and Binance and Gemini, but also running our own Ethereum nodes in order to access decentralized exchange data such as Uniswap. Our clients are institutional investors and enterprises in the digital assets industry, both traditional institutions that are now looking at the crypto asset space, as well as more crypto native enterprises and businesses. A couple of important things about Kaiko. Our data set has currently the largest coverage and longest standing history of non-public data. So it's a unique and non-replicable data set. We offer regulatory compliance data that is mostly used for valuation use cases, such as tax and audit reporting and daily NAV calculation. And we obviously have built the company over a robust infrastructure that enables the entire kind of market data infrastructure to be bridging cryptocurrency exchanges where trading activity takes place and market participants that need to consume the data.
So I think that's a good lead into what the topic of our webinar is about. It's about market infrastructure. And infrastructure is one of those words that can be very vague and confusing. So I thought before we get started, I'll actually just define what is financial market infrastructure. So a financial market infrastructure provider is pretty much any component of the financial system that provides services that ensure the smooth and efficient functioning of markets. So infrastructure, it's critical for both financial stability, but also operational efficiency. And essentially they're coordinating services, bringing together all of the universe of different types of counterparties that exist in finance. Infrastructure, it's systemically important, but it's frequently not talked about, specifically in crypto, but that's started to change this year. So that's why we thought we would get started by explaining what are some of the actual types of infrastructure providers that are out there. The thing about market infrastructure is that it is very similar between crypto and traditional finance. The reason typically why infrastructure is less discussed in crypto is because crypto is associated with, of course, the ultimate infrastructure. It's blockchain technology. But what people forget is that there is a robust and lively market infrastructure environment out there in crypto that is very similar actually to traditional finance. So some of these examples of infrastructure providers in traditional finance include everything from a market maker to an exchange to a brokerage to a clearing and settlement houses and a custodian. All of these exist in crypto. They have been built uniquely for the crypto environment. But of course, it's a little bit different in that many entities in crypto are actually attempting to be an all-in-one infrastructure provider. The best example so far of this is a cryptocurrency exchange. They are both brokerage, settlement, and custodian. This is rare in traditional finance. This is almost always separate. There are walls around each of these to prevent and minimize counterparty risk. And this is something that you currently don't really see in crypto, but it's becoming more and more discussed and more relevant as market infrastructure really reaches the next level. So right now, crypto market infrastructure, it's really booming in crypto. I would say that 2020 was the year that crypto became an institutional asset, and 2021 is the year that infrastructure becomes institutional. So this is a really interesting chart that I pulled from the block, but it shows the entire, I guess, ecosystem of infrastructure providers that exist in crypto. And there's so many, this barely even touches the surface of all of them. But you have everything from market makers, clearing, order execution, custodians. This is all very similar business models to how traditional finance operates, except it's unique for the crypto ecosystem. And I think the biggest trend this year has been actually investment into this unique category of cryptocurrencies. There have been more venture capital deals in the past few months than there have in the past year in crypto. And these are led by leading venture capital firms who recognize that in order for crypto assets to become a new institutional asset class, you actually need the infrastructure supporting these assets to institutionalize. And the most interesting thing actually I've noticed is that traditional actors, they're actually creating their own crypto infrastructure. For example, participants like Fidelity, Nomura, and Standard Chartered, they've all started building their own digital assets offering, which is it's a huge deal for crypto. None of these institutions would ever have touched crypto before the past year. So now, of course, Kaiko, we're a data provider, but that leads us to explain what exactly is data infrastructure. Today, we want to focus specifically on this aspect of market infrastructure. And data infrastructure is unique in that it actually connects almost everything. Data is the pipeline connecting all of the different service providers, and nearly every single service provider that you saw on this screen requires market data for some aspect of their business model. And here is a slide to give a better idea of some of the use cases that like market providers and market participants actually use market data for. Market data is truly a crucial component of the entire financial ecosystem, and it's used for so many different use cases and is absolutely essential to the everyday flows of so many different types of service providers. And so a good way to think about data is imagine pipes connecting various actors in the industry. Through these pipes is information about trades, about active orders, about liquidity, about daily closes, about NAV prices. Pretty much all market information goes through the pipes that data providers create, and these pipes connect all of the different service providers in the industry. And so what actually does data infrastructure look like? Think about it sort of as like a two ends to the spectrum. On one end, you have all of the exchanges. These are the marketplaces that are actually producing market data. You have exchanges like Coinbase, Bitstamp, itBit, even Uniswap, which is a decentralized exchange. And the goal of a data provider is to lay the pipes connecting and ingesting data from all of these cryptocurrency exchanges. So you have the exchanges on one end, and then you have the end user on the other, and a whole lot happens in between. This is why data providers are so important. We normalize the data, we store it, we add analytics on top. We do so many different things to make sure that the end user is able to easily consume and ingest these consolidated data feeds. So pretty much a data provider, it creates chaos into something that's clean and orderly to use. But as many things in crypto, there are, of course, many industry pain points right now, specifically when it comes to data. Right now, the exchange landscape is extremely fragmented. There are hundreds of exchanges all over the world, and they have many, many different formats, many different types of APIs, protocols. It actually requires an entire team to build connections to all of these different exchanges because there's so much maintenance involved. And of course, one of the biggest problems is the taxonomies. Every single exchange has their own unique formatting standards. No two exchanges have the same type of formatting. And so it becomes the job of the data provider to actually normalize and standardize these instrument codes into a single asset taxonomy. Of course, it's time consuming, expensive. It requires an entire company to do it. And one of the biggest differences between traditional financial data and crypto data is that there is almost no historical data out there because crypto exchanges typically do not collect and store their own data. Therefore, data providers are some of the only actors in the entire industry that have collected this data. Otherwise, it would just disappear. No one would have it. And that's what makes data providers so important. And then, of course, the biggest pain point is reliability. Exchange infrastructure is still very shaky. The data feeds that we receive, there's a lot of work that goes into maintaining them. And this has to do with very young exchange infrastructure. And so the job of a data provider is to make sure that these feeds stay live and are high availability. And so why are we talking about this now? What is so important about market infrastructure? And I think that's because 2020 was the year that crypto became a global asset class. 2021 is now the year that we actually need to build market infrastructure that can support crypto's growth as an asset class. We need to industrialize crypto market infrastructure so that it is able to support the types of institutional investors that really need high quality data feeds, but also high quality services. And so I like to think of market data as the bridging traditional finance with crypto finance. Market participants, in order to enter a new market, the first thing that they will do is get access to market data. You need to study the market before you enter it. This means you need access to both historical granular data feeds, but also very low latency live feeds. And this is so that you can create strategies, so that you can create understanding of the market. But what happens if the data channels that you have do not match the formats that you're used to? This is where Kaiko comes in. We're building industrial style data feeds that match what traditional financial professionals are used to. So once we build these data channels that are designed to be integrated into traditional infrastructure, this will actually encourage, and it does encourage, more and more traditional financial participants to actually begin to consume these data feeds and ultimately enter crypto markets. So I see it as very much a virtuous cycle. When you build infrastructure that matches the requirements of these institutions, then you have more institutions that feel comfortable and actually less risk when it comes to investing in this asset class. So here is the core argument of this presentation, is that crypto infrastructure, it really needs to be interoperable with traditional market infrastructure. And what I mean by this is we do not need to replicate traditional finance. Traditional finance, there are many flaws with it. There are many issues with infrastructure. A lot of the infrastructure is outdated. But right now, it doesn't mean that we don't need to create interoperability. And that specifically is referencing to how information is formatted, how data is formatted, and also it's a compliance issue. Infrastructure needs to be compliant, or else institutions will not be willing to connect to these different service providers. So again, it's not about rebuilding what already exists. It's simply about creating interoperability between these two systems. And so how do we actually get there? Traditional finance, they're willing to work. We've seen over the past year, they're willing to collaborate, and collaboration will ultimately be critical to getting to the next level of crypto infrastructure. This involves everything from exchange matching engines to index calculations to off-internet data pipelines. All of this is stuff that people in crypto are working on, but you will get there so much faster by collaborating with traditional financial professionals who have ultimately done this before. So what do we mean by collaboration? What are some examples? And here I'll pass this over to Ambre, who will explain one of our initiatives with Bloomberg.
Yeah, absolutely. And thanks, Clara. Just to kind of recap on Clara's point, there is a very established kind of infrastructure when it comes to financial data and financial services at large. And what we have encountered at Kaiko while we are building our own enterprise offering is around how do we make our data interoperable with the existing system. And one of the pain points that we've suffered from while we're building our own kind of internal database of all the different crypto asset instruments that exist globally is the identifier issue, the lack of unique ways to differentiate Bitcoin dollar price on Kraken from Bitcoin dollar price on Coinbase. Crypto assets are a 24/7 global market with hundreds of trading venues and a 24/7 market driven by offer and demand. So price discovery takes place at the trading venue level, and the price of the same asset pair, such as Bitcoin dollar, across different markets is going to be different. So you'll have a different trade price, but most notably, you're also going to have a different market structure. You're going to have a different liquidity, different bid-ask spreads, different market depth, etc. And so when we identify all those different unique instruments, we currently have indexed over 92,000 different crypto asset instruments that include spot, future, derivatives, swaps, and pretty much any type of traded instruments globally. So we suffered from the lack of unique identifier to refer to financial instruments when it came to crypto assets. And we basically worked with Bloomberg in order to expand an existing financial data standard rather than come up with a new standard. So we worked on expanding an identifier called FIGI. FIGI is an open data framework that is basically an immutable, semantically meaningless identifier that unlocks a whole set of metadata associated with every instrument. So here it's about making the crypto asset industry accessible from an infrastructure standpoint by traditional existing institutional investors and providing them with a solution to manage from a ontology kind of back-end IT perspective, their data and their data services. So this is FIGI. FIGI stands for Financial Instrument Global Identifier. It was a relatively long work stream that we kind of went through over the past couple of years. And Kaiko has now been elected certified provider to work along Bloomberg under the auspice of the Object Management Group, which is a standardization body organization, in order to open this data standard to cater for crypto assets. So this is really, I think, a very good example on how we need to make the crypto asset industry accessible from an infrastructure standpoint by institutional investors. So this will be launched by the summer, and this is how kind of FIGI works. This is applied to crypto assets, but this is already part of the data standard of FIGI. It goes beyond just the kind of asset level or security level identification. Obviously, the asset level class, such as Bitcoin, will have its own FIGI, and then you can drill down actually all the way to the trading venue. So the next level after Bitcoin, the price of Bitcoin doesn't mean anything. You need to talk about the price of Bitcoin expressed in dollars or in euro or in Japanese yen. So then there will be a pair composite FIGI, which will refer to a specific pair such as Bitcoin dollar or Bitcoin euro. And then finally, again, the price of Bitcoin dollar is different whether you look at Coinbase or you look at Binance. And so we drill down all the way to the exchange level and create FIGIs at the exchange level. For example, a unique identifier for Bitcoin dollar on Coinbase. So when you're an institution and you're going to roll out a strategy, you can specify exactly down to the trading venue level what you're trading. So these identifiers are used for really managing the transition of hierarchical specificity as basically you address all the different functional aspects of an investment lifecycle. So that was one of the kind of various examples that Kaiko has been working on in order to make crypto assets more accessible from an infrastructure standpoint to traditional investors and traditional institutions.
Yeah, and I have just one more example of how like collaboration with these types of traditional institutions has really benefited crypto as a whole. And I think one of the biggest trends over the past year has been the growth of regulated investment products, specifically products such as exchange traded products, and also regulated derivatives. And so this has only been possible by collaborating with traditional exchanges. There are exchanges now all over the world that list Bitcoin and Ethereum ETPs, such as the Toronto Stock Exchange. There's a few exchanges in Europe. And then, of course, you have regulated derivatives contracts, which are issued by CME, the Chicago Mercantile Group. These are not done alone. This is not just CME or TSX doing this alone. They work actively with a bunch of cryptocurrency providers to build these products together and make sure that these products are available and actually like compliant with existing regulatory standards. And so this is also Kaiko too. We provide data. And so our data powers some ETPs that are listed on Deutsche Börse and a few other exchanges in Europe. And so data is a really crucial component to actually powering these regulated investment products. And so again, just to summarize, ultimately, robust infrastructure that is both interoperable and compliant is really what is needed today to get to the next level of adoption. We have the reputation is improving, but it really needs a lot of investment. And this is what 2021 is all about, especially the record levels investment you get into infrastructure providers. It's all about building the next asset class and building the infrastructure that powers this. And so before I close, we have one last comment to make, and this is specifically unique to cryptocurrency data providers. One of the most recent trends over the past year that is really worth mentioning is the convergence of market data and blockchain data. This, of course, has been triggered by the growth of decentralized finance and decentralized exchanges, which operate on blockchain networks. So as these decentralized exchanges become easier to work with and the interfaces become more similar to centralized exchanges, market data providers will begin to provide data and it will be more attractive to traders. But ultimately, from an infrastructure perspective, it's completely different. When you access, say, Coinbase versus Uniswap, it's a completely different process for accessing this data. It's a lot, you're interacting directly with the blockchain network rather than just a centralized API. And so this is the biggest difference that market data providers will soon learn how to work with over the next year.
And Clara, just to add on that, I was looking at the list of questions, and there is actually a question about that, about how we are gathering data from a decentralized exchange. Just to be really clear, all the centralized exchanges, they have public APIs where they publish, quote, and trade data in real time. And so this is a relatively straightforward data protocol where we basically connect to the exchange and gather data. This data does not live on the blockchain, right? When you basically execute a trade on Coinbase, this trade information is not recorded in the blockchain. The only thing that is recorded is when you withdraw your funds from the exchange and store it on your own kind of crypto wallet. So that's how it happens in centralized exchanges. And it's very different for all the DeFi protocols. Here, a decentralized exchange such as Uniswap lives on the blockchain, and all the liquidity pool, which is the kind of DEX equivalent of an order book, even though it's a very different type of kind of function. Well, it's not a different function, it's a different process that serves the same kind of purpose, which is matching the buy demand and the sell demand. And so here for Uniswap, the technology and the kind of way that you extract data is completely different than from centralized exchanges. Here we are running our own kind of full archive Ethereum nodes, and we are reading directly from the blockchain all the financial data that is generated by the Uniswap activity. Just wanted to add on that. And honestly, I think when we think about the infrastructure and the financial institutions, I think it's very important to meet institutions where they currently are, meaning that today traditional financial institutions need to understand and to be able to read the blockchain space in ways they are used to. So it doesn't make sense to me to basically bring very kind of alternative type of network metrics to a bank, because they wouldn't know what to do with hash rates. Actually, very few people know what to do with hash rates. However, it's important to be able to provide in a consolidated way and in a harmonized format Uniswap trades along with Gemini trades, along with Coinbase trades, and kind of on-ramp them into the world of blockchain by making the data understandable from kind of traditional perspective. And what that means is that kind of having a smooth onboarding from an infrastructure standpoint as they progressively kind of move into the realms of a more advanced blockchain technology. And that's really what we're providing with Kaiko, meeting institutions where they are today while we kind of, make incremental steps towards where we believe they will be tomorrow.
Yeah, exactly. Couldn't have said it better myself. And that's actually the last slide for the presentation. So Ambre, if you have anything else to add to the slides I add, go ahead. But I noticed we also had quite a few questions.
Yeah, no, I think the slides were awesome. And I think maybe we can just address the Q&A. Clara, do you want to start? Or maybe, sorry, Sophie, do you want to?
No, please. If you see questions that you want to address, please go ahead and pick them out from the list. Otherwise, I can help you sort through.
I actually can't see the list because I'm sharing my screen. So you go for it.
I'll read them out loud, and Clara, if you want to add on what I say, feel free to interrupt. So the first question is the data real time? Yes. I think there's a tiny latency of about 40 milliseconds between when a trade is published at an exchange level and when it's available on Kaiko's API. But yes, it is real time. And we provide both the historical data as well as the real-time data through our APIs. And there was a question about the subscription model. Our business model is SaaS, so clients pay annual licenses that gives them access to the APIs. What we're basically licensing is API keys that give access to the data, both historical and real-time. And there is no Kaiko interface, as in there's no terminal or there's no kind of UI or front end with charts and information. We are really an infrastructure provider, as in we provide APIs and data under the form of feeds rather than a terminal-based model. One of the questions was, are there any ongoing efforts to standardize data that is being led by exchanges or data providers? I would say that currently we are standardizing the data, and we're obviously collaborating and working with exchanges in order to make their data available to the industry, but it kind of more sits at this stage at our level and kind of how we standardize the data and how we format the data.
And I think to go off of that too, it's like a massive coordination issue. And a lot of the data standards in traditional finance, they're actually regulated in that regulatory agencies have certain requirements for like what information you need in every single trade that you get. And of course, many exchanges are not regulatory compliant. So I think that it will be very hard to inspire coordination at a mass scale around the world without actually regulators getting involved.
And there's a question that I love, which is, has Kaiko considered creating Chainlink price feeds? So yes. We are node operators on about a dozen different Chainlink feeds. We serve as Oracle on Chainlink, but we also provide reference rates on Tezos, on Ocean markets. We are basically both able to read from the blockchain, which is what I mentioned earlier with the Uniswap data, but also to write any type of centralized data back into the blockchain. So what we provide on the Chainlink feeds, but it's the same with Tezos and a couple other protocols, is basically reference prices as they are seen trading on centralized exchanges, and then we bring that on chain to serve as reference rate and source of truth for DeFi applications to execute. There's a good question for Clara, I think. Why does the price of crypto differ between exchanges, and what determines kind of which number is the most reliable?
That's a really, really good question. So the answer to that is market fragmentation. So in traditional finance, and there's a process called arbitrage where actors who are traders, they will sort of see differences in the price and they'll trade them out. so that over time the prices are near equal and it doesn't matter which platform you use. In cryptocurrency markets, that is possible, but it takes it's all about information flows. And when you don't have like the actual information to trade the prices and make sure that the prices align, then you get disjointed market prices. And the best example of that is actually happening in South Korea right now. There's a nearly 20% premium on the price of Bitcoin in South Korea. And the reason for this is that capital cannot enter South Korea from other countries, and people cannot trade on these South Korean exchanges. So this creates sort of an isolated Bitcoin market that makes arbitrage almost impossible. And so yes, that's a huge issue still in crypto, is this overall market fragmentation, but it's actually getting better over time.
Yep, there's another question, which is how strong is demand for historical market data?
It's massive. Most people, again, so it's a scarcity issue in that exchanges don't have their own historical data. So the demand for historical data, it's one of our best-selling products. And this is for traders. Traders need historical data to backtest their trading strategies. And so they come to us to get these granular data feeds that pretty much don't exist anywhere else on the market.
Let me look, there's plenty of questions. What is the outlook timeline for, I'll take this one. What is the outlook timeline for Figgy standard adoption and integration? We are looking to issue the first Figgys this summer. And the great thing about the Figgy, which is absolutely why we picked that kind of standard to go with, is that it's already an existing standard that is already implemented at institutions. So the big kind of bottleneck pain points with standards is implementation of a standard, right? If you have a standalone standard that everybody needs to adopt for it to be useful, it's hard. That's where the kind of pivotal hard point is. Defining standards, it's great, but if nobody uses them, it's useless. So the reason we've decided to basically extend the Figgy standard is that there are currently already 800 million Figgys in circulation for every type of traditional asset class. So it's already implemented. There's no kind of adoption phase that we will need to face. It's really about making kind of just creating Figgys for the crypto assets, but there's not going to be a kind of painful adoption phase because from a structural standpoint, it's already implemented. Sorry about that. Thank you, Wayne. Sorry. So there's so many good questions. I'm trying to as you engage with these financial institutions, what is your general disposition toward crypto? What is the most common objections that you have to overcome? So here, I mean, it's really interesting. There was a question about what was my background, and Sophia kind of introduced it in the beginning, but I come from the traditional capital markets industry. I was an equity derivative structurer for about 10 years. And when I got into crypto, it was the early days back in 2012, 2013. And what fascinated me was really the potential that blockchain offered in how it creates digital scarcity. What that means is that it enables people to represent ownership of something, whatever it is, in a completely digital way, which is secure, centralized, censorship resistance, etc. And it also enables anyone to transfer the ownership of that asset to someone else in a decentralized, censorship resistance, etc. way. What it means is that it really offers not just an investable asset class, but rather a platform or a technology that could enable financial institutions and the capital markets industry at wide to rethink at core the way they do things, as in the way we issue assets on the primary market and the way we trade that asset on the secondary market and kind of the entire life cycle of an asset. Today, everything is already digital, right? We're not sharing paper certificates anymore. However, it's still relatively antiquated in the way we do things. Things are still being done in the financial industry how they were done in the past. And so to your question, Eric, about when we engage with financial institutions, it's interesting because historically there was really an angle from banks and institutions, which was crypto bad, blockchain good. There was this huge narrative around enterprise blockchain and how blockchain as a technology was so interesting, but Bitcoin was bad. And today we've seen a 180-degree shift where now we are seeing institutions that are publicly announcing that they are investing quite significant amount of money into synthetic exposure to the price of Bitcoin, which I find very interesting for two reasons. One, it completely kind of changes the narrative around Bitcoin. Historically, I mean, you know, there's no shame in saying that historically Bitcoin has been perceived as a bad kind of, it was very much associated with basically obscure use cases on the internet. And this narrative has completely changed thanks to a lot of institutions that are finally investing into the asset class. So that's great from an investment perspective and from a new asset class perspective. But I think that today we're at the first phase of adoption, which is institutions investing into the ecosystem that they're seeing as a new investable $2 trillion plus asset class. But the long-term gain will be when they kind of go a step further and start using blockchain in order to implement financial services and financial products. And that means we have seen now Binance, which is a leading Asian exchange, launch security tokens that represent Coinbase shares and Tesla shares. This is, for me, a very interesting move. It's the first time that we are seeing traditional assets, in that context, equities, being kind of created and living on a blockchain. And I think that will be the second wave. And our historical market data down to the tick level goes back to 2012. That was just a small question. It was easy to answer. Is it going to be traditional financial services developing market infrastructure or the more natively crypto companies? So it's interesting. I think it's going to be none or both. I don't know if that makes sense. I think we, Kaiko, have been positioning the company and building the company as a hybrid, more kind of fintech company. And all of our investors are fintech investors. So we have built the company in order to be addressing the traditional financial institutions and the traditional banks and asset managers. However, with a kind of culture that is also having a solid feet within the cryptocurrency ecosystem. And I think kind of having the expertise of both, I mean, I come from the traditional capital markets world, our head of products comes from Euronext. So we have this kind of DNA of traditional financial services, but we are also very much plugged in and passionate about the crypto ecosystem. And it comes back to what I was saying earlier about meeting institutions where they are today, while progressing with them and kind of being the reliable partner in order to take them to where hopefully they will go tomorrow about kind of using blockchain as a technology. I think we've addressed most answers. I'm not sure, to be honest, how much time we have left.
We have about 6 minutes, but yeah, feel free to grab any of the other questions that you see, or, you know, just to cap off, you know, let us talk a little bit about what's next in the pipeline for Kaiko, what we should expect.
Yeah.
Your focuses
Clara,
are.
do you want to address that? Or do you want me to talk about it?
That's a good one. There's so much to expect. So I can touch on some stuff and then feel free to jump in. But it's similar to like what I talked about during this presentation, is really creating an institutional data provider. We're working on an entirely new format for our data feeds. And this is designed for institutions to actually integrate their data feeds into their workflows. Right now, we have a public REST API and a live stream WebSocket. And these are really good protocols. They're really good for accessing data, but we're going to the next level. We're building pretty much an enterprise grade software developer kit, an SDK, for accessing our data feeds that will enable anyone to customize feeds in pretty much like any type of data that you want from any exchange, any instrument you'll be able to get access to. So that's our big product designed for institutions that we'll be launching soon.
And I would say, yeah, am I muted? No, I'm not.
Oh, no, good.
So what I would add to that is we're hiring a lot. We're a team of people right now, headquartered in Paris with offices in New York, and we are going to open an office in Singapore, and we're literally going to double the size of the team this year. We just closed, we're currently closing kind of another round of funding that is going to fuel our international expansion. And so as we grow the team in Paris, in New York, as well as in Singapore, we are looking for amazing talents out there to help us kind of write the next phase of Kaiko's story. And so we're hiring across the board: product, engineering, sales, legal, pretty much everything. So if you're here listening to us and you want to apply, feel free to reach out. We'd love to speak with you.
Ambre, thank you for addressing that. People often ask at the end of presentations, "Are you hiring?" So I'm sure that was on someone's mind. Well, thank you to both of you so much for joining us today and for providing such an in-depth overview of Kaiko and kind of your vision for the future. To everyone who joined today, thank you for your insightful questions and for tuning into an episode of the GBBC Virtual Members Forum. We'll be back next Thursday on April 22nd with Circular to discuss traceability and building better business models. Thank you, Ambre and Kaiko and Clara, and thank you to the Kaiko team. We look forward to following your progress, and for everyone watching today, we'll share a recording of this webinar as well as links to learn more, get in touch, and if you are interested in applying, we'll share that as well.